let's actually take a look at gold today. And I want to really break down an analysis that I produced this morning. I have the analysis here, got quite a bit of boosts, um, and I want to talk about it in a little greater detail. Now, I know it might look, you know, like a lot, but I'll break it down, and I made sure to break it down in a way that you would be able to understand and easily digest. So let's start from the left here, work our way right. And you will see I did a actual write-up of it here. I'll leave a copy of this in the description of this video. So let's do from first all the way to the fifth. Right? So we have the last buyer haven, which is prior to the recent one. Now, what is this? When you compare this to this, which is the current buyer haven, the current obvious buyer haven, and we'll get here. This is, in my opinion, the last area prior to this that traders were interested deeply in buys on gold. And we know that traders were interested in buys on gold because, I mean, gold was a bullish market. That's clear, right? We know that gold was bullish. If you look to the 4 hour time frame, you know that, listen, gold has been buying ever since, right? Now, if we know that traders were interested in buys at this level, then we know that there will be stop losses below this level. Now, that's important. We'll get back to that. Now, let's get to point number two, which is bearish momentum or bearish channel, and that can be denoted by these two orange lines. We could say that from the last 7 days or so, that gold has been bearish. 1, 2, 3, 4, 5, 6, 7. Gold has been bearish. Now, it's a bullish market, but with a bearish move. This is important because, again, if anybody has been following me or anybody listens to what it is I say, pays attention to how I trade, you understand how I think, you would know that momentum is one of the main, if not the main, driving factor behind how I trade, how I think, how I operate within the market, within the space, within the industry. Momentum, in my opinion, is the single greatest thing that controls whether your system works or not. All right, you can fight me on that. I don't have time, really and truly, right? But we know that it's been in a bearish channel or in bearish momentum for the last 7 days or so, right? And again, if you understand how I speak about momentum, you'll understand that whatever the market is doing momentum wise, it is very, very likely to continue to do so. That's just how it works. It's very likely to continue to do so. So if it's been bearish, it'll probably continue to be bearish, right? That is further supported by point number three, which is the buyer stop losses. Now, the buyer stop losses, you'd realize that I'm covering the last buyer haven and the current buyer haven, right? And that's point number four. We'll get there, right? The stop losses would typically be below where traders were buying. That only makes sense, right? That's the only thing that makes sense to me, in my opinion. Wherever traders were buying, you put your stop loss below. That's what you've been taught. That's what you've learned. That's what it is you do, right? A lot of people listening to this are probably doing that exact thing. I'm sure if I scroll through the minds, you'll see traders buy now, put your stop loss here somewhere, right? Now, why is that important? Why is it important to understand where the stop losses of the buyers are? Because something I said, right? If gold had the ability to buy, it had the liquidity, the energy, the power to buy. If it did, it would. The fact that it isn't doing that suggests that it does not have what it needs to actually buy, and it needs to go get it. It's the same thing like I always say. Liquidity is the market's energy. Liquidity is to the market what is food to a human. You without food, you can't survive. Without liquidity, the market cannot survive. That is just the way it works. The market captures liquidity by taking out stop losses. Right? That is why they say that the winners are feeding from the losers, or the losers feed the winners. Right? The money has to come from somewhere. When you understand these concepts, trading becomes easier. So we know that the buyer's stop losses will be anywhere below this level, and even up, well, down, sorry, to this level here, which is the last buyer haven, right? Then we have point number four, which is the current obvious buyer haven. And why is it obvious? I mean, it's literally in, what you see here, right? You have this entire zone, right, where One, two, three, four, five. There are 5 areas in the last 1, 2, 3, 4, 5 days or so where traders were interested in placing buys. Don't you think right now, traders will be interested in buys again? And if traders are interested in placing buys here again, don't you think that they'll put the stop losses somewhere within this buyer stop loss region? That's the only thing that makes sense to me, right? So let's go to point number five. Point number five speaks to the possible move. Now we know that gold will continue to go bullish at some point, right? It's not a matter of if, it's a matter of when. That being said, let's actually think about why it might clear out these buyer stop losses before doing so. We just said that we know where the stop losses of the buyers likely are. We know that it needs those stop losses to be taken out in order to get the liquidity or the energy that it needs to continue to buy. So this is the only thing that makes sense to me. This is the only thing that makes sense to me, where the market will go down, get rid of the buyer stop losses from the obvious buyer haven and the previous or the last buyer haven, and then move up. That's the only thing that makes sense to me. Let me know what you guys think. See you soon.